Good day, all. Ira Epstein with your metal market wrap-up, and this wrap-up is for the evening of Tuesday, the 10th of January, 2023. Time right now about 6:30 p.m. Central Time. Please remember, I am going to take off, taking a small vacation for 3-4 days here, leaving the country. Then I'll be back and should be refreshed, and away we go again. And I am tired. It's working through Christmas, all that was hard. And I could use a couple of days to just breathe and not look at the markets, and that's what I want to do. But before I get too far, let's understand what we have coming up. You have a huge battle going on. The battle is there's a camp that believes the Fed is wrong and that they're not going to have to go as high as 5%. They're not going to stick there. Not at all. The economy will be such that they'll be able to roll this back and actually pivot to lower rates before the end of the year. You then have the other camp. And the other camp says, no, inflation's going to be sticky. You'll probably go towards 5%, have to stick there for a while. If it doesn't fall back from there, you could get another acceleration. Those are very different camps. That's where you're at on that. Then we're going to get to the argument this week where we start seeing CPI number. And is the CPI continuing to fall fast, slow, or is it falling at all? Those will be the three stories. If I'm right, even if it falls a little bit, the market analysts will say, no, just like interest rates or jobs data, other data, we'll find that one area that says, no, it's on its way down. Even if it's a slowdown, they'll take that and run with it. The only thing that would hurt the market, in my opinion, on the CPI is it doesn't fall. That would surprise traders. But even then, what they would say is, yeah, but there's a lag effect. It'll be right after that. In other words, you have the pundits and you have those that think the opposite's going to happen. There's a camp that's going to win here and a camp that's going to lose. Keep that in the back of your mind. The camp that I think wins is the metal camp. I think you're going to see that the dollar stays relatively weak. You'll get bumps along the way, but I think it'll be basically a down market. I think it'll benefit the gold market. In the copper market, bet on China. It's that simple. They're going to pull out all the plugs and they're going to try to get growth back to 5%, 6%, whatever number they can do to grab control again. Copper's a beneficiary of that. Do you just buy the rallies and say, I can withstand the pullbacks? I doubt that, but this is my thought. When you take a look at the bonds and notes, you can see that the market is fighting that battle that we talked about. And by the way, I just wanted to show you this for a minute here. I want to give you my free research. So before I finish up what I'm talking about, I will come back to this at the very end of all that we're talking about right now. Let's go back, if we could, to the chart data. That's where I want to end up. So that'll be the battle there. On the energy market, which side's going to win here? If you saw the EIA report come out, and I wrote about it tonight, they are saying you're not going much more than the $80 area this year in oil for an average. The market then will fall a little bit more than that next year as more U.S. production will come on, and they're betting that the demand won't be big. Which side is right here? Is the economy slowing down, or is the slowdown not going to be as much as people think? Because you've got all these groups coming out with these ideas, and the simple fact is in January, nobody knows. I've been telling you that. I'm going to stick with what I do best, pay attention to myself. When I look at the gold chart, it's hard for me to be anything but friendly. This is the bounce we talked about, and the market's still in it. You can see how it's been working higher. Do you chase a rally like this? I don't think so. I think you'll get your opportunity on a pullback. It comes out in left field, but you get them. The pattern has been consistent since right here at the early part of December. Each break low has been a higher break low, and you've made higher highs all the way through. The market had a bullish crossover right here where the 18-day got over the 200. Next, what the market did is it keeps hitting the upper Bollinger Band. This is called the Gorilla Glue trade. Why? Well, the strongest glue you can buy typically in Home Depot, Lowe's, wherever you shop, is going to be what? Gorilla Glue made its name on that. Now, don't get me wrong. There are some other brands that I think are stronger. But typically for the retail consumer, they'll look at that and say, oh, that's the strong one. Well, that's what happens when you keep hitting Bollinger Bands. Eventually you back away from them and you get a correction, and it's often tied to the slow stochastic trade breaking down. But that's not what you're getting right here. In fact, what we're getting right now is if we stay like this tomorrow, we embed. Embedding means that the slow stochastic readings, the blue and the red, have gone for several days over the 80 level. If you've taken my enhanced Bollinger Band course, you then know the course of action from that. If not, get on that. Go to our website at iraepstein.com, education and learn. Go to the enhanced Bollinger Band course. The gold-silver ratio. Well, as you can see, this number's climbing, which means silver is losing to gold. The higher the number goes, the more ounces of silver you have to get 1 ounce of gold. And you see that in silver. The second thing, I keep telling you about Bollinger Bands over and over. Notice how they narrowed in, and when that occurs, you start spinning around. Do I look for a big breakout in the downside? No. Or the upside? Not yet. The market's building, and that spins in there. And often you don't hit the upper or lower band when that occurs. Keep your eye on it. As for the copper market, you've now got 2 days in a row of closing over the upper band. You might even have 3. I forgot if the market on this day closed over that. Let's take a look together and see if we can get that in here. You can see you finished the day at 391.30 over the band. So day 1, 2, 3. Now, typically, the most you go is 5. So if you stay strong tomorrow, I would then look for a pullback going into the Thursday, Friday period. Got it? Tomorrow's going to be an important day. You're overbought, not even close to changing to an embedded reading. The platinum market's in an uptrend. It is flirting with its embedded reading. You see, it's got it. So the trade is buying the market until the red line closes back under 79. And in the palladium market, let me get to that one for you. The market keeps hitting the 18-day average. The pattern is higher lows, higher highs. Doesn't seem to want to go anywhere. And like silver, notice how the Bollinger Bands are starting to wrap their arm around that. When I see that pattern develop, I walk back from the market and I say, hold on. The market apparently just wants to hang at that 18-day average and not go anywhere. In the dollar index, in about a 48-hour period, you went from the upper band to the lower band, just bouncing around here. So which way is it going to be? Is it going to be that the dollar can fall because the Fed isn't going to raise interest rates? Is the dollar going to fall because the U.S. economy is going to weaken right here? Is the dollar going to fall because other currencies are going to get stronger for whatever reason they're going to do? That's what you've got. You cannot tell me you have a trend. You have a higher high and lower low. I won't buy that just yet. And this is typical in the first 6 or so days of trading in a new year. Remember, the market washes itself out one way, then it tries to come back another as the markets play around. Now, I'd love to give you, so you can keep up with me as I get back, my complete futures research package. What it includes is my daily written comments. Monday through Friday, I write Monday through Thursday, 2 a day minimum. If I also put out special updates. Friday, I put out another update as well. So you get one of those, a minimum there. On the weekend, on Sunday, I write. I give you specific entry points, exit points, trade ideas, and back it up with my videos. I normally charge $60 per 30 days for it. I want to give it to you free for you to try it out. How do you get it? You go to our website at www.iraepstein.com. And at that, you'll see free offers. That's where you sign up. I used to be able to just tell you, click up here. TubeBuddy, that's the name of it. TubeBuddy has got a problem. That's who we use to put that up there, and they're not around right now. They're there, but they've got a problem putting it on there with YouTube. They'll get it figured out. Again, iraepstein.com, free offers, you got it. I will see you all come Monday. Have a great, great trading time. Take care.